All right, so take profit and stop loss deal with two things that you're really worried about when you're trading. You're always worried about your reward and your risks, how much money you can make and how much money you can potentially lose. With every trade, obviously that's what people are interested in. Take profit and stop loss deal with these things. Now when you're trading, you don't want to sit at your computer all the time saying, right, if it gets from 100 to 110, I'm gonna take my money. On the other side, you don't want to think, oh my God, what if I leave and I just lose all my money? Huh? No! It's horrible. So take profit and stop loss are automatic ways to, with a take profit, it automatically takes profit, cashes out, yeah, give me the money when you reach a certain point, which you predetermine. And with a stop loss, it automatically cuts you out of the trade and thinks, all right, I've lost enough. I've pre-specified that if I lose $10 on this, I want to close it. It automatically does that when you're not at your computer. So you can go out and have a walk, have a swim, get a coffee, and not have to worry that you're going to lose everything. So, right, this is a virtual account I'm on at the moment. If I go to the trade markets and I look for, let's look for Tesla. Right, so this is some company you might want to buy, some stocks, some shares you might want to buy. I press the trade button. And let's say I want to buy $100, okay? And I'm going to use no leverage. I'll talk about that later. So here you see some of the things which you can set when you make a new trade, you open a new trade. This is if you're trading manually, okay? When you're copying people, it's a bit different. But all right, so I'm opening this trade with Tesla and I want to buy $100 worth of Tesla. So I can set the take profit at $50, you know, so automatically if it gets to 150, it will close the trade and it will cash me out, and I'll have made $50 and I don't have to do anything. I can be away swimming, doing something, and it will automatically close the trade for me. I can either set it as a cash amount or as a rate, 50% of the position. So that will be an actual, at the moment it's at 305.96. It's saying that 456.442, I will automatically close this trade for you and you'll take your profit. I want to see it in cash, so it's $50. That's your take profit. It takes your profit automatically. When you reach a certain level, you're buying, you want the stock to go up. If it does get up to a certain point, you've automatically set it so that it takes the money, puts that into your account, closes the trade. It means you can go out and you won't miss potential earnings. Stop loss. Stop loss is the other way. Whenever you trade, you're measuring the risk. I don't want to lose my money, and the reward. Yeah, give me some more money. So the take profit deals with taking your reward when you reach a point that you've set beforehand. Stop loss deals with your risk, okay? So stop loss is saying, all right, let's say I do go out and I'm having tea with my friends or coffee or going for a swim or whatever I'm doing. And I'm out. And meanwhile, I'm losing money. I'm losing money hand over fist. I don't want to lose it all. And I don't want to have to sit in front of the machine all the time just going, closing the trade manually. Stop loss can help you with that. When you click here, the stop loss, the same stuff comes up. So this is saying if I lose $50, so I've bought 100, if it goes down to 50, just close this trade. Okay, I don't want it, nothing else, that's my decision, close the trade. Again, you can set it as a rate, so at the moment it's at 305.86. If it gets down to 155.33, that number, by the way, is a value of the stock on the actual stock exchanges. It's the number it's at. We can convert that to money though. If it loses $50, get me out of it. It means you can go away and do whatever you want and not risk all of your money. You can set that. You can say, I'll risk $15, right? So if I lose $15, close it, and I go to my take profit, but only cash out if I make $30, all right? So you can open that trade, boom. So that's it, I've opened the trade. Buy Tesla position opened at 305.99. So now if I go to my portfolio and I look down, there's Tesla. So these are those numbers I was talking about earlier, the actual value of it on the stock market. If I go into that trade, I can see here, I've bought $100, that's 0.33 units. I opened at this price, the current is this, 305.33, so it's gone down. There's my stop loss, there's my take profit. So I can change them. At any time I can go back into the trade, I can edit it, and I can readjust those however I want. Brilliant thing, very simple, means I just don't have to sit at my computer all the time. And I can sort of predetermine where I hope it will go or think it will go, and what I'm, willing to risk, what I'm willing to lose. There's another thing which is called a trailing stop loss. So a trailing stop loss is really quite clever. Trailing stop loss means, let's say I buy it at $100 and I'm willing to lose $10. So I set my stop loss at $10. So the value might go up and up and up and up and up. So I've got like $300. Yay! But the stop loss will only be triggered if it gets to $10 below where I bought it, so $90. That's a bit useless. So a trailing stop loss follows your profits. A trailing stop loss says if at any point it goes down $10, close it, okay? So it doesn't stick to the beginning. I bought at 100, if I lose 10, I'm at 90, close it. It doesn't stick to the 90. It can keep going up, so I've made 150, yay! If it goes down to 140, close it. I've made 200, if it goes down to 190, close it. So the trailing stop loss follows upwards. If at any point it goes below 10, I lose 10, it automatically closes. And it's a way of locking in your victories, It means like, let's say I bought it at 100, I've gone off my T, I set a trailing stop loss of $10. So initially that would mean it would close if it gets to 90. But I've gone off, I'm wandering around, I don't know what I'm doing, off-road, bike riding or something. No, I don't do that, but, So I'm off doing something and the value's going up. And after half an hour, I've made $50. After, a day, I've made $100, but I'm not watching. It would be sad if after 3 days I came back and it's gone back down to 100. And at one point I was up at $300 and I just wasn't in front of my computer, so I couldn't close the trade. Trailing stop loss would let that happen. It would mean that whilst I'm out riding the bike around, having a fun old time, it went down $10, but it closed it from 300. I was at 300, it went down to 290. It closed the trade for me because I set a trailing stop loss. Now I've locked in that profit. Magnificent, and it gives you a lot of peace of mind. Now that's if you're trading manually, if you're actually making the trades yourself, opening and closing positions. With copying people, which is kind of what I do, to be honest, I don't want to be doing this stuff. I'm not that good at it. I want to find people, I'm here to find people who are better than me at doing this and just copy them, automatically set my system to copy them. So with that, if you look again at my portfolio, let's say there's this woman, Cookie. So I'm copying her. She's making trades, she's winning some, she's losing others. I can set a copy stop loss. Now copy stop loss is different. Let's say I put $100 on this trader, Cookie, okay? So what I can set when I copy her is I can say if she ever loses 40% of the money I put in with her, so if it's $100, if she loses $40, if the value of it, I don't care what she's buying and selling. I only care if she gets results, and doesn't lose all my money. If she ever loses 40% of my money, stop the copy. There's no take profit. So I don't say if she ever makes 200, stop copying her. No. If she makes 200, keep copying her. It's great. I only want to stop copying them if someone else is making more money, then I'll go copy that guy instead. Or if they're losing money, then I want to stop the copy. But I don't stop individual trades. I stop copying her as a whole. With copy trading, you sort of trust the person overall. They may make 20 trades a day. They may make 1 trade a week. What I care about is whether overall they're making profit or they're losing me money. As long as they're making profit, I don't care how they trade, what they trade. If they do commodities, they do stocks, they do forex, I don't care. What I'm looking at is their statistics to analyze, are they making money overall? So a copy stop loss is a different thing from a normal stop loss. It treats the person you're copying like a fund. I'm not caring about individual things, I'm caring about the overall them as a person. I either copy them or I don't. If they lose this amount of money, stop copying them. That's something I can set. There we are.